That beautiful intro. Everyone, guys, I am so excited to be here today. I am going to blow your mind with a new way to raise capital without going to jail. And we're not just going to talk about capital raising, we're also going to talk about the pains of scaling a business and coming out of it stronger than ever. Because here's the thing, one of my biggest wins, it came out of my most devastating loss. And I want to share that story with you guys because I think a lot of you will resonate with that fear, that unworthiness, that self-doubt that I felt when I was first trying to scale. So I started my real estate investing journey, investing in, the basics, single family homes, long-term rentals. I was stacking property after another. It was going really well. And then I wanted to go bigger. People were buying multifamily, targeting beautiful, larger portfolios, and I wanted that too. But I looked at my bank account. It was close to $0 in there. I could not go buy another property. And everyone told me about OPM, right? Other people's money, need to raise capital, and I wanted to do that too. But I didn't know a single person that could give me a $100,000 check. No one. I was never in rooms like these before, and just the thought of someone giving me a six-figure check, it really felt like fiction. So I thought, what about my family and friends, right? These people, they've seen me grind on the late nights, doing cold calls, covering my nose, and painting properties and all of that, right? Surely they would take that leap of faith and join me on my next venture. So I pretty much lined every single person on an Excel sheet. I called every one of them, and all of a sudden, Jason says, hey, count me in for 20K. And Lillian's like, yeah, girl, I'm down for 15. And Santi says he's even, open to investing $50,000. And I did the math, and I'm Asian, so I'm pretty good at doing math, right? I counted all the numbers together, and I actually had more than $1 million lined up from my family and friends that wanted to back me, that wanted to go in with me on a bigger portfolio. And that sounds great, right? It sounds perfect. But, I was so wrong because I wanted to raise capital the right way, right? I didn't want to go to jail. People talk about all sorts of scary stuff, and I don't think stripes look good on me, I didn't want to go to jail for that. So, I talked to everyone. I said, what's the right way of doing this? And everyone said, well, you can only raise money through a syndication or a fund. And that's because of this thing called a security. So raising capital becomes a security if people are giving you their money with the expectation that you're going to make them profits without them doing any work, right? That becomes a security. And because this becomes a security, all of a sudden, I had to hire an attorney. I paid them $30,000 just right off the top to set up this 90-page PPN, which means private placement memorandum. Honestly, sounds like a tongue twister. It was so complicated, I could barely read it, let alone my investors. And then I was told that I had to pick between a 506B or a 506C. 506B meant that I could raise from 35 unaccredited, just everyday investors, but I couldn't do any marketing. No social media, no telling people what I was up to, basically just a giant tape over my mouth, right? Well, that's gonna make raising capital so much harder if I have to just shut the fuck up about what I'm doing, right? And then 506C, it was like, okay, you can market, but guess what? No unaccredited investors, no everyday investors. You can only raise from the super wealthy. Well, that means goodbye to Jason, goodbye to Lillian, goodbye to Santi, goodbye to the only money that I had access to, right? I felt so cornered. It was like picking between two evils, and I had no choice but to go with 506B because those were the friends and family that loved me, that wanted to back my deals, that trusted me, and it was really the only path to take their funds. And then guess what? It took 4 weeks to set up this syndication. 4 weeks. And then after that was over, I had 2 weeks left before my close of escrow, and I had to pull all that money together in 2 weeks. And I am seriously just embarrassed to show you guys these text messages that I sent people. I was scrambling, I was hustling, and I begged people to give me that money because I didn't want to fail. I had so much pride. It was my first time doing this, and I had a lot of stuff on the line. I just can't be a failure. And then, 2 weeks, it wasn't possible. I couldn't raise the money. I lost that $30K that I gave the lawyer. I lost the deal because I couldn't close in time. And I put $25K EMD on that deal. So I lost it all. Just 55 grand, just gone. I failed. I was a failure. And that just absolutely crushed me. And it wasn't even about the money. It was the shame that came with it, because now I have to go call Jason and Lillian and Santi and all those people and tell them, I got you guys excited for no reason. I didn't close the deal. I couldn't raise the money in time. And that felt like shit. And I tried to see if I could find peace with that. Spent a lot of my time just staring at the ceiling, just thinking, maybe I'm not the one that gets to raise capital. Maybe I'm not the one that gets to go bigger, right? I try to see if I could just be okay with that. And I think in a lot of us here, us entrepreneurs, there's that really stubborn part of us where we're like, no, we can't. There's gotta be another way. And that was me. There was just that fire in me. So I started just thinking more about my experiences outside of real estate, where I came from, which was, San Francisco, the tech mecca. And we were investing in a lot of other things where my friends and I, we pooled our capital together to go invest in stocks, invest in crypto, even, the startups that we thought were going to be the next Meta or Google, right? That's what we pooled our money together and placed our bets on. And we would actively look at different deals together. We would underwrite them, vote, and then deploy our capital on the ones that we believed in. And this thing is called an investment club. It's been very popular for the last few decades, especially within tech hubs. And here's the thing that gets really interesting. Because we were actively participating and reviewing deals together, this way of pooling capital, it is not considered a security, right? It's not considered a security because of this active participation. And now, all of a sudden, I don't need a PPM. I don't need to pick between a 506 B or C. And there is no 30K lawyer that I have to pay off the top and spend 4 weeks on all of this paperwork. All that, the red tape, it was just gone. And I thought, why doesn't this exist in real estate, right? This is so common for everything outside of it. Why doesn't this exist? And that's when I said, fuck it. I'm gonna go build this thing, right? I'm going to build the rails for investment clubs in real estate. And that's really when the idea of Fractional was born. And I'm a huge believer of this. I think when you are willing to bet it all on your vision, the right shit just happens. Because you know what? Out of nowhere, we get a call from the former senior counsel of the SEC. And he says, hey, Stella, I heard you're trying to build investment clubs for real estate. This is going to be a game changer. I'm going to make sure you do everything right. That call, it felt so surreal. And this is literally the guy that wrote all the rules about how raising capital works and how things work at the SEC. He is calling me and telling me that investment clubs, what you're doing in real estate, this is real. And this is the future. So seriously, guys, think about the things that you want to move forward on. Just lean into that. Take that leap of faith because the magic will happen. So back to investment clubs. How exactly does that work, right? Well, how many of you guys here know Pace Morby? He's like the legend of creative finance, right? Well, Pace, he runs an investment club on Fractional to raise capital pretty much every single month right now. And it's super simple. You start out with your investment criteria. So in this case, he's doing a debt club. So he says, who wants to pool their capital with me and let's go lend to fix and flippers at 12%. That's the investment criteria. And then he opens it up to anyone with a minimum check size of $20,000. He tells everyone in his network, there's no marketing restrictions around who you can talk to, right? So he invites his whole network, they all come onto a Zoom call, boom, Pace raises $2.5 million in an hour, just like that, right? And then, now that he's got his club members, they pool their money together, all Pace needs to do is find those deals that fit the club criteria, and then everyone gets to underwrite it together with him. They get to learn and earn. It's such an amazing experience. And then they vote to approve which deals the club wants to deploy its capital on. And pretty much as long as Pace doesn't bring a yacht or an airplane or something crazily absurd, right? As long as it fits the criteria, people are going to do their own underwriting. They're going to learn with him, and they will likely approve, right? Because they are here to gain that experience and be a part of the club under his leadership. So once it's approved, boom, right? Funds are deployed from the club. It's that easy, it's that simple, it's legal, and it's collaborative. And it doesn't have to be just debt. It can be equity, it could be whatever it is you want. So Pace is also really obsessed with RV parks right now. So, same playbook, right? Criteria is now we're gonna go buy RV parks in Texas at 20% cash on cash. This time he opens it up to everyone with $15,000, they pool their capital together. Now Pace brings RV park deals, they review it, they vote on which ones they like, and then they deploy their capital. It's that easy. And you can do this for anything. Whatever it is you're working on right now. It could be mobile home parks, short-term rentals, developments, businesses even. Whatever it is you're working on, we are here to make investment clubs stupid simple for everyone. That is what Fractional is here to do. So we'll take care of all the setup and compliance. We've got the former senior counsel of the SEC on our team. We want to make sure everyone is doing it right. So we will set you up on your investment club in minutes instead of wasting a whole month on it. And then you get your unique Fractional club link, then you can send out to everyone in your network. That's where they're gonna pool their money together, and we're gonna take care of the LLC, the operating agreement, everything legal compliance related, and then all of the voting and collaboration, it is tracked on our platform as well. Because we wanna prove that whenever SEC ever comes knocking at your door, hey, everyone was active, everyone collaborated, they voted on the deals, here is how the collaboration happened. And then back office, that's another really annoying thing, right? Nobody here wants to be a full-time accountant. Well, we're here to take care of that all. We streamline and automate all of your profit distributions to your investors. You don't need to cut 50 people a check a month or anything like that. We calculate all of that. We file taxes for your investment club, and we create K1s for every single one of your investors so that you guys can actually focus on what's most important, which is building your investor list, building your reputation, your brand, and actually operating your deal. We want to make investment clubs the simplest, the most legal thing for all of you guys to scale up to the next level and not go to jail, right? And speaking of not going to jail, marketing is probably the place where we see people mess up the most. It is 100% sloppy marketing. So we actually compiled this free compliance cheat sheet around what you can versus cannot say. So definitely scan that QR code there. I'll go super high level right now. What you can say is your investment criteria. You can invite people to participate and collaborate with you. That is all good. What you cannot say is guaranteeing people returns. That is the biggest red flag you can possibly wave. Do not guarantee people returns, and do not suggest, imply in even the slightest way that they are gonna make money with you in their sleep, do absolutely nothing, be completely passive. Those are huge no-nos. So make sure you scan the QR code, print it out, put it in your pocket, tape it over your computer, whatever it is. Do not mess up on marketing. And the rules, they apply to everything, right? It's not just investment clubs. They apply to syndications and funds as well. And I'm not here to, just shut down syndications or funds. I think there are absolutely larger deals where it does make sense for that model. But if you are someone that is actually trying to raise from a real network, and especially if you're raising $5 million or less, I think, an investment club is just a no-brainer. So I'm putting these two models side by side, right? Why pigeonhole yourself to only raising from accredited rich people if maybe that is only just a tiny bit of your network, right? Why not open up the floodgates and have access to double, triple, quadruple the capital that you have access to from your real network, right? Have the option to raise from all investors, and Don't waste that 4 weeks on setup. Launch in a few minutes and actually spend your precious time telling people and raising that real money. And don't deal with all the complex paperwork. Don't pay an attorney so much money. Focus all of your energy on starting as quickly as you can and actually rounding out your investors and operating your deal. And that's the thing with entrepreneurship, right? It's all about choosing the right weapon and the right tools at the right time that will give you the most leverage. And I want you guys to think about some of the pains that you've experienced, because it will help you reinvent yourself and create new weapons. And that 55 grand that I lost, that absolute failure that crushed me, it helped me turn Fractional into a monster of a business where we've now helped operators raise over $400 million through our model. And we've also raised $20 million for the company from some of the best VCs like Fifth Wall, Y Combinator, and some celebrities like Will Smith and Kevin Durant as well. So I want you guys to think about this. What are the lessons that make you powerful, right? Maybe it's that deal that you lost. Maybe you're even too scared to raise money right now. What have you learned from those things? And you're not here to do it alone. We're here to help you. So please, we love to connect with you all to just share your story, figure out how you want to craft that into $1 million pitch and be able to raise your first deal, your 100th deal, whatever it is. We're here to help. We're at the booth. We've got a scary grandma right in front of our booth to scare you all about SEC jail. So please come talk to us. And I want to wrap this up just with that previous slide. Think about the moments where you felt like maybe this was the end, right? If you ever felt that way, lean in on those pains, anchor on those pains, because it will certainly help you create a much more powerful version of yourself. I know we can do this. We're here to crush it with you guys together. Thank you so much. Questions from anyone? Go for it.
If I'd like to raise about $2 million, what will your fees be approximately so that we know what we can minus?
Yeah, great question. So his question was about fees. So we don't have any sort of startup costs. So there is no 30 grand attorney fee or anything like that. It is completely free to start. Fractional, we make our money from your investors when you actually hit your raise target. So let's say, for your example, you're trying to raise $2 million. You can set up an investment club for free, invite your network, and then once you hit that $2 million mark, your investors, they pay a 3% transaction fee for us to handle all the legal setup, all the compliance, payment processing, all that. So your investors, they're paying that 3% transaction fee. And then for everything back office, so tax filings, K1s, profit distributions, the entire club pays $3,500 annually, which I think is extremely competitive to the cost of a CPA.
So how does this interact with your bank? Or the bank doesn't care if you're raising money from an investment club?
Are you talking about your lender? Yeah, each lender has their own requirements. Usually what we've seen as popular is that the club leader, they could be the personal guarantor of their loan if they are getting leverage. And then that is actually a very reasonable and justified way for the rest of your investors to compensate you in potentially sweat equity or however you want to structure it, because you are taking on additional risk compared to your investors.
So when you do private money lending for the purpose of flips, and you get it from friends and family as you started, so is that illegal and you must do an investment club, or can you continue to raise money from friends and family for flips?
It depends on how you structure it. So if you are raising money from a group of people and you're doing all the work and they're not doing anything, and you haven't filed a syndication or a fund, that is illegal.
How does the investment club leader make money? The investment club owns everything, they make all the decisions. I guess I'm just missing it.
Great question. So he asked, how does the investment club leader make money? So you as the leader, you can be very creative around how you want to structure your deal. So what we've seen as pretty common is creative equity as an option. So things like we talked about just now, sweat equity, right? If you're bringing something, you're bringing your superpower to the table. Maybe it's a short-term rental and you're self-managing, right? You can have an extra 5-10%, whatever it is that you think is reasonable that your investors also believe is fair. You can structure that as sweat equity or creative equity in the deal. We've also seen people do profit sharing as well. So let's take debt for an example, right? If I am leading a debt club and I'm bringing my expertise to the table and sourcing a bunch of deals and also teaching people how I'm underwriting it and putting together, an underwriting packet, I would want to be compensated for that. So I could put together a profit sharing agreement and we could be lending to a borrower at 20%, for example. And I will put a profit share agreement in place where my investors, they get 12% and I get 8%. So there's a lot of different ways that you can structure compensation for yourself as the club leader for bringing something special to the table.
Are there minimums with the service for residential real estate? So let's say a fix and flip, you're looking for under $500,000 to a minimum. Is this a good vehicle for that as well?
Yes, great question. So he asked, what is the minimum for setting up an investment club in terms of a raise target? We would generally recommend at least $250,000. Anything less than that, it's probably not worth going through the whole ordeal of bringing a group of people together.
So this is essentially an LLC. So you buy this property under the LLC name, and all the members of the club is essentially the shareholders of the LLC. Is that correct?
Yes, so we create an LLC, the investment club members, they become members of that LLC. You can be a part of that LLC as well and hold title together, or it could be you are outside of the investment club LLC and then you have a joint venture with the investment club.
So for the profit share agreement between the GP and this entity, like who creates that?
It is usually created by the club leader, and then the club members will review that. If there's any changes they want to propose, they can do that, and then they will sign off on it.
So it'd be as if like the LP would get, say, 70% of profits, and then that would get distributed pro rata to all the LLC members?
Yes, so whatever profits are available to the investment club members, you will send that payment to the LLC bank account, and then we will calculate pro rata how much each investor should get and then send it to their bank account. And in an investment club, you should not call them LPs because that means that they are silent. So everyone in an investment club, they're technically considered a GP because everyone is active.
Does it get trickier with investors that are not US-based or US citizens?
So for tax reporting purposes, we do require that all investors coming in together, they either have an SSN or an ITIN or an EIN. Yeah, Uncle Sam wants to know what everyone is doing, so that is the case.
When you're raising money, you guys hold it as they commit the money, or once the target is hit, they're required to give you?
Great question. So because I've been burned so many times with soft commitments, we as a company do not believe in soft commitments. Because people can tell you anything, right? They say, count me in, and then once it's time to wire, they fall off the face of the planet and you can't find them. So we do not like that. We actually require people to put down that 3% transaction fee as their earnest money deposit. And that is non-refundable if you hit your target and the club is moving forward and they decide to flake for whatever reason. They will lose that money, which is why on the platform, the flake rate is extremely low. People have skin in the game at that point. We have them, pay that fee to lock in their spot. Yep. Go for it.
Can each club deploy multiple projects, or is it like one club per project would you recommend?
You can definitely deploy towards multiple projects. That is how you essentially reach economies of scale. So let's say, you raise $2 million and you go, your average buy box is maybe 200K deals, right? Now you can actually have the club go invest in 10 different opportunities together. And it helps you as the operator move so much faster because you've essentially pre-raised this $2 million up front. You have it ready to go. You have speed as an advantage to close.
What happens if things don't go well and you can't pay your?
One second.
Yeah.
What happens if things don't go well and you're not able to pay back your investors on the schedule or at the rate that you had promised?
Well, first, you do not promise them anything, right?
Right.
We just talked about that. Do not promise them anything. And the beauty of an investment club is that people are here to do it with you, right? You didn't choose that deal. Everyone chose it together and they're backing that vision and working on it together with you. So, I mean, real estate is pretty real. You know, not all deals go well and that's just what happens. Everyone as a club will then work together, figure out how they want to mitigate, maybe transition to a new plan. It's really something to figure out together. And as long as you frame it that way, don't promise people returns, then you'll figure out a second path.
But you mentioned earlier about the investment club leader being a personal guarantor on something. So what would be the liability for the investment club leader in a scenario like that?
So a personal guarantor is something that a lender potentially requires. So that is, pretty much just how it's set up with the lender. I mean, if the deal has really gone south in that extreme way, then as the personal guarantor, then you are obviously on the hook with the lender, between those two parties. Anyone else?
So can you just do let's say it's family, your parents, siblings, can you just do a promissory note with a set interest rate and that's not considered security?
You could do that if you're having one person per note. The moment you're raising capital from multiple people, that becomes a security. Like you can have one promissory note with one lender, but if it's a group of people pooling their money together, then you're going to have to file for a syndication or a fund.
Just do 10 different promissory notes?
Well, then they would be on different positions at that point, right? If you have 10 different promissory notes on one property. Does that make sense? So lender A would be position 1, lender B would be position 2, then that is basically a lot of positions. Someone who is in lien position 10 would obviously not want to be in that position because if something goes wrong with the deal, then they likely would not be able to collect on their funds, which is why if you're pooling money from multiple people and you need that for the deal, it is better to have them under one LLC, one entity. That way, basically everyone is on the same position in that lien.
What if you did it on assets, equity that's tied up in property that you already have, and you just use that as collateral, and they're not related to any new ventures? Could you just do promissory notes like that?
You could. So you in that case, you would probably just want each lender on a different property if you all want to give them first or second position at the minimum. Oh, go for it.
What are you seeing as the best way to communicate this opportunity without getting into that whole marketing risk label?
Yeah, I would say keep it at the criteria level and talk a lot about your previous case studies and successes, right? So let's go back to the debt example. It could be I'm telling everyone in my network, hey, I have been doing really great lending to other people. I want to pool all of our capital together and go lend to fix and flippers at 12%. Who's interested in doing this with me? And then give examples of what happened when I lent to borrower A and B and C and things like that. So you're essentially getting everyone excited about your idea and your vision, and then get them to join a private Zoom with you or do one-on-one calls, and then you can break down underwriting more into the specifics, and then basically convert them into joining your investment club.
Okay, got it. So but you couldn't do that directly, hey, join my Zoom because I'm going to be essentially pitching this. It's kind of a workaway around to making it towards legal.
Right, so the opposite of that would be, hey, give me your money, I'm gonna give you 12%, you don't have to do any work, I'm gonna go make everything for you, and you will, 200% make that 12%, right? That is basically the opposite of that, where you're promising people something, you're telling them that they get to be passive. that automatically becomes a security, and then you're going to go need to get all the crazy paperwork done. Yeah.
If you're a brand new investor, how does Fractional help you raise money for your investment club?
Great question. So if you're a brand new investor, I would say that, the costs and the complications and the complexities of setting up a syndication or fund, it will absolutely crush you, right? Just like how it crushed me. You're putting everything on the line before you even got started. That is a huge risky move. Versus with an investment club, if you're newer in the game, you can start just by telling people in your network what you've been up to. I think building that investor list up front is incredibly helpful. So already start, telling people about what you're doing, host those Zooms, and if you get a lot of love, it will come together. If you realize your network doesn't think you're quite ready yet and they're giving you feedback, which is all great things to have, right? Like failures will build you up. That's also fine. There's nothing on the line, you haven't lost a penny, and now you get to reinvent, become better and reiterate on what you should do for your next run.
Thank you.
Yeah.
Stella, thank you so much for all this information. It's amazing. So just to clarify on perhaps my earlier question about is private money lending illegal? So it sounds like if you do, then with private money lending with friends and family, it's still okay if you do one private money lender per one note. That's okay to continue to be doing, and you don't need an investment club if you're pulling money from friends and family to have a prominent P&L for your club.
Yes, one lender on one note is okay. You do not want to broadcast that on social media or anything like that because a promissory note is a security. So if you're out there on your social media saying, who wants to give me, a note at 12%, that is not okay. And especially if you're trying to raise that money from multiple people, then even worse.
Yeah. But individuals is okay.
Yeah, individuals, privately, one lender on one note, that is okay. Yep. I think one last one right here, or another one over there too. Two final questions.
Thank you so much. Just to be clear, so Fractional doesn't help us with any of the marketing.
We do not. So we are not a marketplace. We don't help people find investors, and that's because raising capital, it's built on trust, right? Why would I give someone my money for a complete stranger that I don't know? That just doesn't make sense. So it's really important for you as the operator to build trust, build your brand, your reputation with people around you that believe in you and want to do business with you. And then we will come in and set up all the legal compliance and back office.
So thank you, really great information. Thanks a lot. On a specific question about short-term rentals, usually, when you have a couple of people doing together, the soft cost segregation, bonus depreciation is very tricky. Is there a way to really structure that in a way that you're working with a couple of, you have a club now and you have people investing, but the cost segregation studies are opposed towards only one investor? Is that possible?
So you can have the cost segregation and any sort of tax benefits apply to the investors of the club as well, and then it will be passed down to each individual investor.
Can you do it a specific investor instead of 4 or 5 of them? So some might come only for cash on cash, or some others only want bonus depreciation and tax benefits. Is that possible to structure it that way?
That is more difficult because we generally want things to apply to the entire club. Yeah, so if you have two very different strategies or goals, it would actually be better to make separate clubs for that. So you can have one club that is more focused on cash, maybe another club that is more focused on appreciation. Yeah.
Hey, real quick, I'm sorry if I missed this. Maximum number of club members?
Maximum number is 99. It is quite a crazy high number, definitely not the normal. Generally, what we see is around 15 to 25 people as most common. But if you've got an amazing, huge network and they all want to go into one club, 99 is the maximum.
Will you need everyone to approve the project in order to deploy the funds in the of the members?
Great question. So we've worked with our council to create a way where the voting is efficient, right? We don't want people to be held back on deploying capital because someone is out there vacationing in Hawaii, right? So what we've set as standard is 50% ownership of the club voting. It hits a quorum, which means that vote is considered valid. And then out of the ownership votes voted, you generally want between 60 to 80% approval for a deal to move forward. So that's what we've set as best practice. That way you get that active participation, people are active, but if some people are out, they're not holding back the club. And generally from what we've seen, people make the decision to approve yes pretty much within 24 hours of a vote going out. Oh.
Yeah, so a little bit more in the actual specifics of how to manage once you structure your club. So you just talked about voting. So let's say I'm the club leader, do I have to go or fetch the votes, or how does that work?
Great question. So all the votes are hosted on the platform. So you just basically create a poll that says, I found property A. I think it's good because of XYZ reasons. Here's my research. What do you guys think? That vote will trigger an email notification to all of your club members. They can review the information, do their own due diligence, and then basically click yes or no directly in the platform. So 50% quorum, and then out of the votes voted, 60 to 80% saying yes, depending on what threshold you want to choose. Yep. All right. I think we're good. Thank you so much, everyone. Yeah, so that's where we see a lot of operators mess up, and then especially if a deal does go south, then all of a sudden you've got these unhappy investors, and then they then realize that you actually didn't even raise capital the right way. So guess what? They're gonna call the SEC police, report you, right? And then that's where people get into a lot of trouble.
Got it. And so basically the solution is to start an investment, in other words, start an investment club? Is that kind of the gist?
So that's what we're doing is we, one, want to create more awareness around what is a security. Don't understand whether what you're doing is a security or not. And then if you want the option to raise capital from your network in a collaborative setting where everyone is actively participating, it becomes not a security, which is what an investment club is about. And because it's not a security, the SEC doesn't regulate it, which is why you don't have to deal with the red tape and the complexities.
Okay, interesting.
Yeah.
How many investment clubs does the platform help set up, or how many?
So we've helped people pool together over $400 million in different investment clubs so far. Yep.
Okay. Cool. And so you're the booth with the scary...
with the scary grandma.
Yeah. That's interesting. And so that's I was wondering actually what that was, and now I understand.
we want people to know that they should do things right and not get into SEC jail. Yeah.
Okay. All right. Great. Well, thank you so much.
Thank you. Thanks for coming.
Hey, we came in late. Do you have a slide that you can share with us to let us kind of know what an investment club is?
Yeah, sure. Do you want to stop by the booth later and then I can explain it to you? Would that work?
That would be great.
Okay, perfect. Yeah.
Anyway, this is what it's for.
Oh, perfect.
It's a Morning Brew real estate.
Got it.
Newsletter.
Got it.
So
amazing.
Check it out. I'll be publishing, about this event on Thursday.
Got it.
So-
Do you usually cover live events? Is that your focus?
This is actually this is my first time covering a conference. Like I usually
Got
just
it.
find stories, report them out at home, write them up. So, but BiggerPockets invited me to come here. And
I
you
see.
should come and check it out because I've never been to. I'm a BPCON version, so I came. And
Amazing. Well, I'm so
checking it
glad
out.
you came.
Yeah, definitely. I like it.
Awesome.
It's
Well,
really something.
we'll love to stay in touch.
Great.
Yep. Thanks, Judy.
So you can raise funds for your own project. Like
Yeah.
if we're doing development, you don't have to raise it for like a project you're gonna go buy. You could be planning to do a redevelopment. And
Yeah. Like we've seen, like co-living is another example where people will basically set their buy box as their investment criteria, and then folks will pull their capital towards that, and then they're gonna go buy whatever properties that they like that fits the criteria. People will obviously approve because
it sounds, every time someone asks you a question, it sounds like it's much more flexible than I was thinking.
It is very flexible, yeah.
The problem I'm having, and you guys are in a different situation, is like when you say go out to your network. I don't have a network. I mean, you've got how many customers do you have?
25,000.
Right. So that's what I'm saying. You have 25,000 people. You could go. You need 99, right? So anyway, I don't have more questions.
Yeah, that's awesome.
Thank you.
All good.
Great. Do you have any questions at all? Yeah.
Amazing. Well, super great to meet you guys.
Thank you very, very much for your help.
It went good. Right, exactly. Right, versus the opposite would be, I'm so excited. Like, give me 12%. I can definitely make this back to you. And then when you can't keep that promise, then that's when you get a lot of angry investors, and they could pursue legal action against you.
And do you feel like in terms of asset classes, you're getting more participation with certain asset classes such as like BRRRR in comparison to just pure flip? Because maybe you're looking for a 2 or 3 year turnaround or a long-term play, or is Fractionals a lot of your customers more in the flip and short turnaround?
We've seen a lot of everything. People do long-term equity deals too. We've seen people do, co-living deals, self-storage deals for 3 to 7 years. And yeah, pretty much there are key moments where people can be active, right? The first is with deal selection. Sometimes it could be like selling the property early before the exit timeline, right? It's usually those key decisions that the club is involved in.
Thanks so much.
Yeah, of course. Thanks for coming.
You were almost safe. One of the questions that actually Boyd brought up was like, how about in terms of eventually being able to buy them out? In terms of if you want, is it forever as long as the property or whatever is in existence, or can you structure it before, like when you get X amount back over a lifetime, and then we're done and moving on?
That's up to you to decide. So you come up with the exit strategy as the club leader. Like It could be, hey, we're in this club because we want to do equity or debt for the initial down payment, but my plan as the leader is that we will get these properties refinanced at month 18, right? And once that's refinanced, that will be the end of the club, and everyone will get whatever proceeds are left, and I'm going to own these properties on my own. So you basically just want to lay out what your vision and your plan is up front, then bring everyone into that thesis, and then you just put it into play.